Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. As we head into a new month and a fresh quarter, a number of themes are beginning to emerge as some of the biggest opportunities of the post-pandemic recovery. One of these is rapidly surging global inflation, which is continuing to add fuel to the red-hot super cycle across the commodities complex. Now, with the pandemic easing and economies reopening, inflation across the globe has surged to levels not seen since the 1990s. Soaring energy prices, staff shortages, logistical bottlenecks around the world, they're just a handful of reasons why the price of everything is going up fast. Last week, Federal Reserve Chair Jerome Powell stated that inflation could persist for longer than expected as the reopening pressures and supply chain problems continue. He also acknowledged that inflation is a process and not a one-time event, signaling that it may take years before inflationary pressures return to normal levels. The current rate of inflation in the US is 5.3%, which means consumers are now paying more for goods across the board than they were a year ago. Almost every essential from food to furniture has increased by 33%. Gasoline prices are up 52%. Used car prices are up 36%, whilst house prices have accelerated by a whopping 23% from a year ago, fueled by the record-breaking surge in essential home components from lumber to steel to aluminium to copper. Just like the US, nearly every economy around the world is experiencing a rapid surge in inflation. Canada's annual inflation rate that hit 4.1% in August. That's the highest level in 18 years. Meanwhile, UK inflation hit 4% last month. That's the largest jump since 1997, whilst Eurozone inflation hit a 13-year high of 3%. Many economists now forecast that inflation could reach double digits ahead, which ultimately paves the way for a multi-year or even decade-long commodity supercycle. If you're wondering just how high inflation could get, you only have to look at what's happening across the entire commodities complex. Last month, aluminium prices broke out to 13-year highs. Nickel prices broke out to 7-year highs. Uranium prices surged to a decade high, surpassing a record 6-year high. The bullish momentum also spilled over into other commodities, with sugar prices hitting 4-year highs, cotton prices blasted through 10-year highs, whilst lithium prices blasted through an all-time high. Meanwhile, natural gas prices rallied to 7-year highs, soaring more than 350% this year. Oil is up 293%. Goldman Sachs now predicts that oil prices, they could hit $90 to $100 a barrel by year end from around $80 per barrel currently. The good news for traders is as long as inflation continues to run hot, this ultimately means there's a fortune to be made. If you want to actually beat inflation, you can't just stockpile cash in a savings account. It won't earn interest fast enough to combat inflation. Banks, hedge funds, they are making multi-billions capitalizing on the super cycle, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, they've already made in excess of 6 and 7 figures so far this year, and we still have another 3 months left to go. If you've been kicking yourself for missing out on one of the biggest trading events so far this year, and you want to make 2021 your best year yet, you still have time. We're currently seeing one of the greatest wealth transfers ever in history, and the time to start making money in the commodity super cycle is right now. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. Firstly, moving over to copper. Copper prices surged 2.4% to the upside on Friday. We've seen gold surge over 1% from Thursday through to Friday. Platinum prices recovered over 1%, and silver prices, they surged 2% on Friday. This is played out exactly as we mentioned to you last week on both gold and silver asset of the day, which was to expect the dollar to break out over the course of September and to further accelerate at the end of September with end of quarter profit taking. This enabled us over 6 positions on the dollar to bank over 900 points last week. So of course, for every 1 lot contract that you'd be trading, that's $9,000 of profit. For every 10 lot contract that you would be trading, that's $90,000 of profit. What we've also capitalized on here is the buyback opportunity at the beginning of a new quarter, buying into gold last week and also building into 5 new positions on copper. This allowed us on Friday to bank 500 points across both gold and copper. So again, for every 1 lot contract that you'll be trading, that's $5,000 of profit. For every 10 lot contract that you'll be trading, that's $50,000 of profit. So the way that this has worked, we've seen typical end of quarter outflows for many of the metals here. This then results in a buyback opportunity right at the end of the quarter, and then as you move into a new quarter, fresh capital comes in, which is exactly what happened here with gold, silver, platinum, palladium, and gold. They all surged on Friday, the 1st of October, as we've moved into a new quarter. In fact, hedge funds and money managers in the last week, again, they've added to their overall net long position on copper. Hedge funds and money managers increased their overall net long position by 3% in the last week. Of those funds that do have a position on copper right now, 66% are long. We've also seen an increase in the overall net long position for both silver and also platinum too in the last week here. And this, of course, comes off the back of quite a bearish September for those metals, which are now beginning to base as we move into the final quarter of the year. As we mentioned to you previously, we've also capitalized on this recent breakout to the upside with gold. In fact, we bought in at 1,727 US dollars per ounce. This has actually provided us with some really quick profits here into Friday's close. A quick 310 point breakout that we've capitalized on this market. We are also holding some of that position as well as we head into next week. The other point that I would be aware of is that as we go into next week, we do have China on their 1 week public holidays for the Golden Week. And with that, during the Asia Pacific session, it's very common to get thinner liquidity. This can create exaggerated moves in the market, and often you're not going to see metals get much support during that Asia Pacific session. It's usually towards the end of this week, then the week after, where the metals can pick up some big momentum. I would definitely have them on the radar. So as it relates to copper right now, this is a market that you want to be watching over the month of October. Typically over this cycle throughout the last quarter, copper does tend to perform well. We've already been able to establish a number of positions. Platinum too, 1.2% move to the upside on Friday. Typically platinum, very much like silver, tends to do well over October. Once we've got past the 1 week China public holiday, this is typically where platinum would then pick up further momentum. And then of course with the dollar here, after we banked our profits here over 900 points on 6 positions last week, we've now seen the dollar start to pull back, which is very common as you go into the final quarter. As you move into a new month, fresh capital is coming into the markets, the dollar will often be under pressure. Other markets you definitely want to have on your radar going into next week will include natural gas. We discussed it with you previously on our natural gas report. Expect pressure to the downside right at the end of the month, which would give you an opportunity to buy back in lower. We've now seen over a 10% correction to the downside on natural gas after it broke out to 7-year highs, giving you an opportunity to buy back in lower. Again, typically natural gas is a strong performer as we go through the month of October. That is absolutely one that I would have on the radar. And we also talked to you through Palladium last week as well, which has essentially been basing for the whole week here, holding around 1,900 US dollars per ounce. Previously, Palladium prices, they broke out to all-time highs back in May. They've corrected 40%. The risk to reward profile is very attractive for this market. And again, in the final quarter of the year, typically Palladium is a strong performer. So I'd absolutely have this on the radar as well. As you know, bull markets, they don't move up in a straight line, they zigzag, and that presents savvy traders with back-to-back trading opportunities. One of the biggest obstacles that holds retail traders back from achieving their desired success, it's not having access to data, market intelligence to make confident decisions with accuracy in these highly lucrative markets. If you follow the wrong strategy, or worse still, if you lack access to the right data at the right time, you will end up wasting lots of time, money and effort and have no results to show for all of your hard work. If you want to thrive and not just survive in these highly macro-driven markets, then you need to adapt and utilize a professional, research-driven approach. Trading like every other misguided retail trader using outdated technical analysis or gimmicky technical indicators will not work. We still have another 3 months left to go of this year. Time is the most valuable commodity that you have. Make sure that you don't waste it. This is where you want to be utilizing a research-driven approach to the market, learning how the hedge funds, money managers, banks, and institutions are positioned in the market, utilizing data, statistics, market intelligence, understanding and learning the daily, the weekly, the quarterly, the monthly cycles for each commodity, alongside intermarket correlations, ratios, understanding sentiment, Of course, marry that up too with fundamentals, intermarket correlations, understand too the news items which will have the biggest impact on each commodity, and of course marry that up too with how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to our real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.